Something huge is happening, and it's visible here on Glassnode's HODL Waves chart. On this past weekend, on Saturday, November 22nd, we saw the 24-hour constituent, the 24-hour group of BTC holders shoot up to 3.824%. That may not seem like a lot until you zoom out and you realize quickly we actually haven't seen a level like this since way back over here, back in, 2020 in March, like the COVID crash, or even going back further during the 2016-2017 rally where we had a single day, huge spike up here, up to 4.05%. These things do not happen every day. This pump right here, which looks so small, if we even look at the last 2 years, this is an insane shift towards buying the dip for BTC, even though the price doesn't really reflect that yet. We're going to be talking about this chart and a couple of other things here on Glassnode, all in today's video here on Coin Bureau Trading. What's up? My name is Aaron Dishner from the Better Traders. You're watching Coin Bureau Trading. Go ahead and smash that subscribe button. Join us on our journey to become better traders and going deeper into trading strategies here with Dan, myself, as well as our other hosts and guests during our live streams. So we're going to go back over here. We're going to talk about what this is. The HODL waves show us basically when we have new groups, new buyers stepping in. So HODL waves increasing 3.82% on Saturday the 22nd is insane. That is a huge, huge, huge shift. Because what's crazier is that this is going to roll over into so many other groups. Meaning that if this is actually a good amount of buyers that are serious, we will see an increase in 1 day to 1 week, 1 week to 1 month, 1 month to 3 months, and we're still going to have to wait to actually see that come to fruition. But these three alone, 24 hours, 1 day to 1 week, 1 week to 1 month, these are incredible, incredible signs. I'm going to show you why. We're going to start back here in 2022, actually. So this is our bear market bottom. This is the FTX crash. We saw 24 hours, or rather an increase in new holders in a 24-hour period rise to 2.278, and it shot up even higher here, November 18th, 2.654. To get an idea of how insane this is that we pumped up as much as we did. But look what happens over here. This is why this is called the HODL waves. Let me actually zoom out a little bit. It's called HODL waves because we can see the holders rolling over to be 1 day to 1 week, 1 week to 1 month, which is why this falls down, because after about a week or so, this falls down, but this increases. And then we see a new 1 month to 3 month, 3 months to 6 months, et cetera, et cetera, et cetera. It keeps going. So it's rolling over into the next, into the next, into the next. If we go back over here into 2020, March, this is the COVID crash, getting rid of the longer groups, you can see a massive 1 day spike here on a buy the dip moment opportunity of a lifetime at 3.546 on March 12th. We saw a huge spike in 1 day to 1 week, 1 week to 1 month, 1 month to 3 months. It increased a lot. Okay. Now, what I need you to understand is that I'm not saying that we just had a COVID crash. I'm saying that even after the COVID crash, we had a little bit of a recovery. There were still months of chop. There is a huge difference as well in terms of this buy the dip opportunity and COVID, obviously, because COVID was a black swan event, right? So when we're thinking about everything right now, what we're seeing, what we're experiencing, there are a couple of things I need to separate and differentiate for you so you can understand what's the difference between this huge spike and the past three ones that we saw back over here in December 2024, March 2024, and then the bottom here, December 2022. But before I get into that, check the description down below. There are tons of links to sign up for other exchanges like Femex, BYDFi, 2bit, These all have some incredible deals to offer you guys when you sign up and trade on these exchanges. Plus, there are more exchanges, tools, wallets, lots of other offerings, including the Coin Bureau Club here. So sign up for this to get access to way more information, insights, and alpha that's curated by Dan as well as Guy and Nick on the main channels. Plus, there is a link to sign up for the Better Traders course, 15 Minutes of Financial Freedom. And we're actually having a Black Friday sale right now. So it's 50% off this course, which is cool. So I want to go back over here to Glassnode to talk about the difference between these past 3 spikes. What makes this one really different? If we think about what was happening up until this point, we saw a massive surge back over here in October because of the spot ETF hype. And then there's a little bit of, people got kind of tired of it. It's like, okay, cool, the price is going up. And then we had a dip. When people were buying the dip. Then we saw more people buying right here. See these spikes right there? These are huge buying signals right here. And they're happening on the same day, Wednesday. So a large entity was buying to push up the price. And that was the top in March. But it did create a nice big bump. Do you see that? And this bump right here marked a temporary top after an uptrend. Another uptrend rally. This is the election pump. So we saw October, things started to go a little bit more. And then we see some big buys coming in over here until finally we see Wednesday, Thursday. And then the price tops out, the metric tops out late December. And then that's that. What makes this new increase so different is that this is not shooting up obviously after a large rally like these ones. This isn't like an exhaustion pump, I guess you could say, or an exhaustion signal at all. This is very clearly buying the dip, like majorly buying the dip. Very similar to what we saw in our bear market bottom back in 2022. If we were to go back over here to 2018, looking at the 2018 to 2019 cycle, we saw a massive increase over here when Bitcoin was euphoric, just below 20K, and everything kind of cooled off until we saw people, short-term holders, stepping in. Now, not huge numbers, but pretty big, like almost 3%, more and more, until finally there's a huge burst. What we're seeing right now, and look at the total right here, it's about 16%. What we're seeing today is something extremely similar to this bottom in 2018, something very similar to what we saw back over here in 2022 November, which was at 12-ish, what is this in total? Just below 13%. And then check out where we are now. This is going to blow your mind. Look at where we are. We're above 13%. This is not a sign of a top. If anything, this is a sign that lots of people have decided 80K is a pretty good bottom. That doesn't mean it's the bottom. Are we going to be bouncing and rallying up from here? That I'm not so sure about still. One major concern I have over here on TradingView is the fact that stablecoin dominance continues to go up higher. The moment we get another one of these guys, the red triangles, or even better, a blue diamond, which is a TBO close long, I'll feel a lot better. But honestly, just seeing stablecoin dominance go inside of the TBO cloud, that will make me feel a lot better. Bitcoin is looking decent. It's not out of the water yet. It's not out of the woods, rather. Now, I actually want to go over here to BYDFi, to the Perpetuals Futures chart, to show you something really interesting. If we look at RSI here, when I'm using RSI with a length of 7, and you can access this by going up here to open up all the indicators, same things that you'd find on TradingView. What's really interesting about the recent recovery that we're seeing is that we have a nice cross above 25, which is what I call an RSI reset for Bitcoin. We've seen lots of these, by the way. We saw one over here before it pushed up and rolled over. We saw one over here, it pushed up and rolled over. We saw one over here, it pushed up and rolled over. The important thing right now to pay attention to, you have to keep an eye on the trend. And right here, I'm just using a smooth moving average with a length of 21. Even if I were to make it a little bit tighter, like a 9 SMMA, it's very clear that this is a down trend. You cannot ignore the fact that we're still bearish. So let's do a thought experiment. What if, let's just say, what if 80K was the bottom, short term, which it probably is? We have been conditioned to expect to short the market because we've seen everything losing so much of its value. Bitcoin fell down a total of 36% from 126K down to 80K. What we have been trained to expect up until this point is that any recovery, any move that goes up here to this moving average gets instantly rejected over and over and over and over and over. We know that the trend is down. It's very bearish. So here's my thinking. What if whoever's been selling, they're done. They're out of coins. They can't sell anymore. What I expect to have happen is some sort of push up here, which will coincide with our moving average. So maybe at about 92K, 93K, maybe. But once we hit that level, I don't necessarily think that Bitcoin's going to have an amazing V-shaped recovery up to $117,000. Nothing like that. I see lots of stuff like that floating around online. If we look at any previous market bottom, what we're looking at right here, is very similar to this. So what we're expecting, or what I'm expecting to see happen, is a bounce like this to the moving average, this guy right here, before we go lower. Usually we don't see an insane V-shaped recovery, only if it's like a really disastrous low, like August 5th. But again, this is because the Nikkei was crashing. Even back over here, we saw the price of Bitcoin go back up to the moving average, but still struggle to really push off and rally. And just a couple of days after that, if you're paying attention to time, even after rallying, it still fell down about a month later. What I actually think will happen next is basically back over here in January. If we go back over here to January 2022, we know that Bitcoin fell a lot and it bottomed out here in late January. And then we saw all this crazy whipsaw price action, right? Everything was going up and down, up and down, up and down, even went up higher. And everyone was feeling really good, especially right here. Why? Because it felt like Bitcoin was going to be breaking above overhead resistance. And it kind of did for a moment. This recovery, by the way, was a really amazing recovery. Up 38% in the matter of 12 days, 13 days, 15 days. It's like 2 weeks. That must have felt so good after seeing so much selling from 69K all the way up here, down here, like 53%. The truth and the reality of markets is that we can't go in one direction forever, whether it's bullish or bearish. So my expectation for a period of chop, I think, is actually legitimate because we've been oversold for such a long time. We haven't had any sort of bullish relief. And it would make way more sense for market makers to allow, or rather to help push prices up, so that way they can dump on us again and whipsaw around more and more. But the problem is that when people are using a really fast moving average, and you're not using something a little bit slower, you're not paying attention to the macro trend. So if we go to our current day right now, the problem with our macro trend, but compared to the other couple of sell-offs that we've had, it's pointing down really, really low. Like this is looking extremely bearish. Yes, we're oversold. Yes, we should have some sort of corrective bounce up to this moving average. But this is not looking good. Please understand, I want to see things go up higher, but the more I look at this, the more I'm expecting things to be bearish for next year. I could always be wrong. And you know what will actually change my mind? The two things that will change my mind about next year is going to have to do with stablecoin dominance. If stablecoin dominance actually falls down into this cloud, and if you don't have the cloud, so falling down below 8.2% and just continuing to go lower, then I'll change my mind. Okay? But personally, it's a very, very strong bullish chart. We're looking at a chart that has a very strong uptrend moving up higher. The slow line curling up means the macro trend is up. My target for combined stablecoin dominance is up here at about 20%, which means a whole lot more pain to come. as stablecoin dominance increases by 130%. Doesn't have to happen. Things could always turn around. Maybe the money printers will actually change things this time. But until proven otherwise, I'm still expecting every sort of little bounce that we have like this to be a bull trap. If we look at Ethereum, same story. These were all bull traps, bull trap, bull trap. If we look at other coins too, they've been having lots of these bull traps like XRP, bull trap, bull trap, bull trap. It will feel really good to see coins pump again, I'm not going to lie. But if we're still seeing combined stablecoin dominance highly elevated above the cloud, if we're still seeing BTC struggling with not enough volume to support the price action, which is another telltale sign that this is artificial, it's not sustainable. It's not. So while it's true that we have some incredible data, looking at a massive buy the dip opportunity, volume isn't really being reflected to show that bullish increase in volume for Bitcoin, for Ethereum, for a lot of stuff right now. So while it feels good, stay cautious. This is exactly what the market makers would want you to think. Everything's been bearish, and we're only going to go lower until finally we get some sort of little push up, lifting everyone's spirits, only to dump on them again and again and again. Even if we get some sort of bullish rally that happens, which I do expect to happen for alts, it'll be a final exit rally before things go lower, personally. So what will change? Bitcoin having significant volume on this bullish reversal, and of course, stablecoin dominance moving down, which would be really good. Now, there's still some possibility of things turning around, but if you're not prepared for the bearish scenario, you definitely missed this video that I shared about a month and a half ago. You need to watch this. This is going to be laying all of my targets out for Bitcoin, where I think it's going to be headed by the end of next year at the end of the bear market. Watch this, and until the next time, you know what to do. Stay awesome and stay in the green. Peace.